Hi everyone, and welcome to Blockchain Whispers School of Crypto. Let me ask you a question. Have you been dreaming of that financial freedom, becoming rich, dreaming of that mansion in the hill and a nice car on the driveway? In that case, look no further and join us in this journey to fulfill all your dreams. We will help you in this series of lessons to become the independent trader and become rich by applying the knowledge we will teach you in these lessons. This journey will consist of lessons adjusted to different levels. Elementary lessons where we will be covering the very basics about Bitcoin and trading. High school lessons where we will dive deeper into how to chart and the most basic indicators. College where we will get into more advanced charting methods. Master to give you the pro level trading skills such as scalping in leverage trading. Then finally a PhD level where we will be educating in live lessons on the most advanced trading skills. Before we begin this exciting journey, let me introduce myself and who we are. My name is Ms. J. I'm a new member of the Blockchain Whispers crypto team. I didn't get here by luck. I worked hard to earn my stripes and be a part of the team. Blockchain Whispers is known to be one of the most accurate crypto predictions team in the world, and we created 4 elementary videos for you, all for free, to learn and gain knowledge about crypto and trading, and finally stop saving and worrying about every penny. Today we will be covering the following topics: what is blockchain, what is Bitcoin, recommended wallets, short guide to exchanges, understanding risks, the zero-sum game, and the Blockchain Whispers the ultimate. So what is blockchain? When trying to understand blockchain, I want you to split the words first, block and chain. It is a growing list of records called blocks, which are linked using cryptography. What is cryptography? Well, it's the art of writing or solving codes. The software that powers them is called blockchain. Each block contains a cryptographic hash of the previous block, a timestamp, and the transaction data. The hash is what links them all together that makes it a special block, called the Genesis block. So what does blockchain do? They store information across the network of personal computer, making them not just decentralized but distributed. This means that no central company or person owns it, but yet everyone can use it and help run it. The structure of blockchain is a distributed database, and that is what makes it decentralized. Information is shared on the network and it is updated frequently. It is also easy to verify in the network. This also makes it difficult to control for a single identity because the data is available publicly and it is transparent in the network. One thing that makes blockchain technology amazing is that it eliminates the need for the middleman, since the transaction is managed by the network rather than a centralized system. A graphical interface, also known as GUI, is created for blockchains in the form of wallet applications. GUI is a type of user interface that allows users to interact with electronic devices. The blockchain security encryption technology uses public and private keys. What is a public key? The public key is like a username or address where it shows the user's address on the blockchain. It can be seen as a long randomly generated numbers and letters. The private key acts like a password and only the user knows its field. If you lose this key, there is no way of gaining access to the assets inside the account. I want you to better understand blockchain. Imagine a lot of safes or walls in a large room where they're all made through penetrable glass. That means it could be seen by everyone and everyone can know how much is in every safe. These safes are just like regular safes. They all contain a slot which currencies can be put through in order to deposit in any safe. All the owners of the safe has a key that can be used to access what's inside the safe. So, when someone wants to open a new account, he is provided with a safe, a deposit address, and a private key. Let's say you wish to send money to someone else. You will need to provide the address of your safe to this person. He will then use the address, also known as a private key, to transfer the cryptocurrencies to your account. We all know that one of the main issues that technology faces nowadays is security. Blockchain has 3 main features that provide security, which are hash, proof of work, and distribution. A hash is a function that converts each input of letters and numbers into an encrypted output. It defines each block from another. Any changes to a block automatically changes the hash of the block. This is why the hash is useful to detect any changes to the block. A change to the hash causes a subsequent block to become invalid, since the next block is referencing to an unknown block. This really goes to show you how difficult it is to tamper with a block of information. Since a computer can make thousands if not millions of computations per second, the hash is not enough to overcome tampering. Proof of work helps with this problem. For a blockchain to add a new block to it, a solution to a particular math problem must be found with what is called miners. Miners are nodes in the network which are responsible to take care of the integrity of the data inside the blockchain. The function that needs to be solved is cryptographically secured, so knowing the output does not help load and find the input of the function, and this is why the function is irreversible. The only way this math problem can be solved is to try many combinations. This would be exhausting. But let's say this is something that a hacker wants to do. He'll need to try a lot of combinations until the function satisfies. As blockchain grows, the problem gets harder to solve, because even if the math problem was solved, the node still needs to share the answer with the other nodes. And if it is verified, the user gets rewarded with cryptocurrencies. Proof of work is a mechanism that slows down the creation of new blocks. Taking some examples, Bitcoin requires about 10 minutes to calculate the proof of work and add new blocks to the chain, while Ethereum takes merely about 15 seconds. This slowdown mechanism prevents a hacker from tampering with the block, since tampering with the block requires the recalculation of proof of work for all the following blocks, and that takes too much complication and power. The third security feature is provided through distribution. Since the blockchain is kept with a decentralized system, i.e. peer-to-peer computer network is public and anyone is allowed to join. When a new node joins the network, it obtains a full copy of the blockchain and verifies that everything is in order. Upon creation of a new block, it is sent to everyone in the network, where each node validates the block and makes sure that no tampering is involved. Once it is verified, the nodes add to the block to their blockchain. All the nodes in the network create a consensus where they decide which blocks are valid. The tampered blocks are rejected. Data cannot be corrupted, since a greater amount of computing power is required to overwrite the entire network and alter the copy that obtained in the existing network. To successfully tamper with the blockchain, one must first change the data of the blockchain. He requires hacking. The hacker then must change all the subsequents since the hash of the block is altered, and also redo the proof of work for each block. Apart from this tampered blockchain must take over at least 15% of peer-to-peer so that everyone else accepts the tampered blocks. This makes it close to impossible. Blockchain is there for the resistance of modification of data. I know there's a lot of new investors out there that are asking the question, what's Bitcoin? So let me help you about the history of blockchain technology. The blockchain technology was first used in 1991, but it got popularized by Satoshi Nakamoto, where he developed Bitcoin in 2008. Bitcoin is a type of digital currency where to transfer generation of currency units are regulated through encryption techniques, and it also works independently through a centralized deterrent such as a bank. Bitcoin is the first decentralized digital currency. What makes it even better, the elimination of a centralized authority means transactional fees are much lower, and it can be used anywhere with internet access. And the best part, the account cannot be frozen and there are no limits. When you buy Bitcoin, it is kept in a digital wallet, which can be located on a PC or smartphone. Bitcoin has grown so much that sometimes it's referred to digital gold. And since Bitcoin is unregulated, the price tends to fluctuate more easily than other fiat currencies, which are regulated by a central bank. With Bitcoin, we can also maintain merchandise anonymously, since there is no financial regulator required to allow the transaction to go through. For those who want to obtain Bitcoin, there are three main ways to do so. The first way is to purchase them through an exchange using fiat currencies. The second way is by transferring to another person, which imposes transactional fees. And the final way is through mining. Mining involves solving complex computations to earn Bitcoin as a reward. Bitcoin is then stored in a digital wallet that exists in the cloud or on the user's PC. Unlike all the fiat currencies, Bitcoin only has 21 million Bitcoins to date. There is around 17 million Bitcoin circulation. In theory, since the supply remains the same, the value of the currency should follow and increase. There's also another important feature that Bitcoin payment has, is that transactions is allowed to happen with a disguised identity. It's not like traditional electronic payments. Verification is not required and no additional needs to identify yourself upon sending Bitcoins. As long as you have the necessary Bitcoins to be able to proceed with the transaction is allowed to happen. One thing that you guys should know is that Bitcoin transactions are irreversible. This means that the money cannot be sent back and the transaction cannot be deleted. If the transaction is recorded in the network, it is impossible to modify due to the fact that any transactions on the network cannot be tampered with, as I explained previously. Bitcoin can be seen as Satoshi, Sats in short. The smallest Bitcoin unit is 100 million of a Bitcoin. That's 0.701 BTC. A cryptocurrency wallet is a digital wallet where one can save, receive and transfer cryptocurrencies. The wallet has private and secret codes which allow the wallet holder to use cryptocurrencies. It is very important to keep these codes stored and secured properly by using an app or a website. First of all, it is important to know that there are different types of cryptocurrency wallets, such as hardware, software, mobile, online, and paper wallets. I will help you understand what they are and how they are used. Let's start with hardware wallets. Hardware wallets are small technology devices that are inserted in one's computer, laptop, or mobile phone. They generate private keys securely to safeguard your cryptocurrencies and do not require any internet connection. The best part about this is the keys are not exposed to hackers. There's also another advantage. Any virus or malware in your computer cannot be transferred to the hardware wallet. And making things even better, they are encrypted with a PIN and the hardware must be available in hand in order to confirm a transaction. This also prevents more hacking. But also, it's very important to know that if one misplaces the hardware wallet, you can still recover your coins by creating a secret backup code, although the services are not free. A hardware wallet secures the security of your cryptocurrencies. There are some recommended hardware wallets like Ledger Nano S, Ledger Blue, and Trezor. Looking at cryptocurrency software wallets, you'll find there's many out there. The most common one is being desktop wallets. In this case, the software is downloaded and installed in one's computer, and you don't need to worry about the operating system. Most software wallets are available for any operating system, such as Windows, Linux, and Mac. It is also important to know that there are a few that are limited to one operating system. There are a few cryptocurrencies that offer their own desktop wallet, which are designed specially for their own coin. The good thing about desktop wallets is that they are secured since access is only provided through the device which they are installed in. But there are disadvantages. You are required to keep the files secure from malware and viruses to keep the cryptocurrency safe. That is why it is important to keep the private key secured and backed up in case a reinstallation of the desktop wallet is required. Here are some recommended software wallets: Exodus and Electrum. The mobile cryptocurrency wallet comes in the form of an app that you can download using a smartphone. The downloaded cryptocurrency wallet allows easy transactions to take place and on the road. The negative thing about mobile cryptocurrency wallets is they can be hacked through internet connection. And also, if your phone is lost, there is a risk of a breach. The recommended mobile wallet is Jaxx. An online wallet can be accessed through any computer device since it runs on the cloud. Most of the times they are linked to an exchange. Online wallets can be more convenient to access and easy to use, but they are controlled by a third party and private keys are stored on the cloud itself. As a result, it may be less secure and more vulnerable. They do offer security such as two-factor verification or even through a text message. Sadly, online wallets can still be targeted by hackers. There is one web-based cryptocurrency wallet, and that is Coinbase. Coinbase is an exchange that offers the wallet service through their website. You can also use their app by downloading it on either Android or iOS. The benefit of Coinbase is it allows you to have control over your keys. It also allows you to buy cryptocurrency over time with the current device. You will be able to buy Bitcoin, Ethereum, or Litecoin. Last but not least, we have cryptocurrency paper wallets. Paper wallets are known for the level of security and ease of use. In fact, they are considered to be one of the safest wallets. This is an Intel software that generates two sets of keys in order to transfer cryptocurrencies. So what you would do is transfer the funds from the software wallet to the paper wallet or vice versa. The process is known as sweeping. It can be done manually by entering the private keys or by scanning the QR code on the paper wallet. This would give you complete control over your funds. This also solves the problem of hackers stealing your funds or malware attacking the software. And the best part, it doesn't require any special device or hardware. But the one thing I will advise you is that you need to protect the paper and the printed codes. It's also important to know that there are disadvantages too. Like your paper can easily be lost, stolen or damaged, so it is important to keep backup prints. And also, the quality of the prints may also have a negative effect. If you're considering a cryptocurrency paper wallet, keep all these facts in mind. We also have some good paper wallets that we recommend. They are walletgenerator.net, bitcoinwallet.org, and mycelium.com. The crypto exchanges are used to trade cryptocurrencies, but you can also trade alternative coins, also known as altcoins. You will need fiat currency to buy either of the major cryptocurrencies such as Bitcoin or Ethereum. So what you have to do is transfer fiat currency to an exchange. Most altcoins are mainly paired with Bitcoin, Ethereum, USDT, also known as USD Theater. What does pair mean? Well, it means that if you have USDT, you can buy either Bitcoin, Ethereum, and there are many other altcoins out there that are paired with USDT. There are examples of fiat currencies. Some are Coinbase, Bitpanda, and Kraken. You can use these exchange sites to convert your US dollars to Bitcoin or any other cryptocurrencies. Exchanges include Binance, KuCoin, Bittrex, and IDEX. To understand an exchange, it could be overwhelming at first, but with a few explanations, it becomes very easy, and this is where I'll help you. Firstly, it is important to know that all exchanges contain 5 components, which are price charts, order book, exchange pair, buy and sell panel, and trade history. These are the basic structure one must come familiar with in order to start trading. So let's begin. Let's start with price charts. The price charts indicate the history together with the current price that a certain coin has against another. What does a price chart do? It represents price against date. The price chart can give you the indication whether the price went up, down or sideways depending on the trends based on history. You will also have an option to change the time frame of the price chart. The time frames can be changed to as low as a minute up to a month. It's quite simple, right? Candlestick chart is the most preferred chart. Why? Because candlesticks show the full story and how the price reacted to the selected time frame. The price chart can also be converted to show depths. This means it can show you the current state of the order book, such as limit buys versus limit sales. The order book shows the current price of the coin, together with open orders that people set to specific price. Let me try to explain this in a different way. Let's say you put an order in to buy Bitcoin at $8,526 US. You will then have to wait for a seller to fill your order. This means that the person that is selling his Bitcoins at exactly $8,526 US, he is the person that's going to fill your buy order at $8,526 US. This kind of transaction is called a limit buy. On the contrary, let's say you hold Bitcoin and you would like to sell it at $8,530. You will have to wait for a buyer who's willing to buy at exactly $8,530. This kind of order is called limit sell. The exchange pair panel contains all the cryptocurrency pairs available in that particular exchange. With this panel, most exchanges show the following coin stats, such as current price volume and changing of price. You will also have an option to place some coins to favorites. This will help the problem searching for your favorite coin, because a search field is placed in a section so that the particular coin may be easily found. The buy and sell panel is where all the action happens. There are 3 actions that a trader may perform, which are limit, market, and stop limit. Not all 3 options are available on every exchange, but the limit order is available on each and every exchange. The limit order is choosing to trade at a specific price whether you're buying or selling. The trade will only go through if the price reaches the value you set to get filled. Until your order hasn't been filled, it will be placed under an open order. It can be cancelled at any time as long as it hasn't been filled. This is the most preferred option for many traders because transactional fees are much lower. On some exchanges, you will have an option to use a percentage of your portfolio. That means a percentage of your capital. There are options like 25%, 50%, 75%, 100%. These options makes it so much easier to know exactly how much you're buying in on that specific trade. Market orders is a place where you either buy or sell at the market's current price. This means that your order will be filled through someone's limit buy or limit sell at the first available price or prices. I wouldn't recommend this trading option, but at times it can be deemed useful, such as right before a breakout. The stop limit order can be complicated at first, but let's have a go at it, shall we? A stop limit order is an order to stop your trade at the conditions you have set for it. For example, let's make things easier. If you bought Bitcoin at $8,000 and you want to make sure that your losses are minimal, you'll first need to place a stop price below the price you initially bought. For example, $7,980 and your limit would be $7,950. This means if the price drops to $7,980, your order would be triggered and it would turn into a limit order. So in other words, your stop is the trigger that activates the sell order, which is the limit. And once your limit order at $7,950 reaches, the limit will automatically sell your Bitcoins at that price. The stop limit order is there to protect you from any price drops, flash dumps, or profit or loss holdings. The trade history panel shows the executed buy and sell orders happening in real time. This panel will show you the price, the quantity, and the time that the coin was traded. This means that the trade history panel will show you how much was traded at what price and what times. Risk management and understanding risk are one of the most important things you should learn and know. Let me start with the definition of risk in terms of trading. Risk refers to the possibility that you could lose all your capital, and you should always know that there is an element in risk in any trade. Just think about it for a minute. If there's no risk involved in the market, how can you as a trader make a profit? Let me give you an example. Let's say you bought Bitcoin. You're doing so in hopes that Bitcoin rises in value so that you can make profit, right? But the truth is the opposite trader won't care if the value of Bitcoin falls. So if you sell your Bitcoins lower than you initially bought, you'll carry losses. You should also know that the crypto market is very volatile, but it does have guidances for a favorable outcome. We all know that a coin can increase or decrease in value according to the behavior of the cryptocurrency market. Let me try to explain this in a different way. The value of the coin depends on the volume and the number of people that are willing to buy or sell that coin. Also, there is a lot of cryptocurrencies with low volume. Those coins can be influenced more easily if there is an increase or decrease in volume as compared to a coin with a higher volume. Same occurs with the supply of the coin. If a lot of people sell the coin at the same time, the value of the coin will fall, and that is the risk involved when you undertake an investment. Remember everyone, it is near impossible for us to eliminate risks. But what you can do is reduce your risk to an acceptable level. This is why it's important for you as a trader to analyze the risk and the amount that could be potentially lost. Always have a plan to minimize such losses if the need arises. And also, every investment has its own type of risk. Normally, any investment with higher returns require taking a greater risk. In order for you to become a successful trader, you should have a trading strategy and a winner strategy. So how can you limit or minimize your risk? I would suggest fast reliable equipment required to make a trade, such as a fast PC or other devices, and remember to use fast and reliable internet connection. Always take into consideration fundamental analysis and technical analysis, and use a reliable trading platform. Do not trade with money you cannot afford to lose. Do not chase a trade, and block your emotions. It is important that you should always limit your losses on each trade by using a protective stop loss. But remember, it should not be set too low as it could be difficult to make any profit. Your trading strategy should be evaluated and tested in historical data and in live markets. It is important to diversify the risk in your trading plan. This means that you should not invest all your capital in one cryptocurrency. And the final tip for you guys? Practice makes perfect. The zero-sum game is mainly seen in a game theory. This would be the situation that for one person to win, another person will lose. This results of a net benefit of 0. I want you to imagine 5 friends playing a game of poker. Each player has $10 to play in the game. As a result, a total combined wealth of the 5 friends is $50. Let's suppose each player contributed $2 during a hand, and when the winner is determined, those who lost pass on the $2 to the winner. This means that the 4 players have a remaining balance of $8 each, while the person that won has a balance of $18. However, note, the total wealth of the table remains $50. Why is that? Because the gains were equal to the losses. So this means that the net change of the wealth is 0. You're probably asking yourself, what does this have to do with trading? Well, let's say you are selling Bitcoin at a certain price. Another person is buying Bitcoins at the same price you are selling it at. And that is why there is no difference in the total of wealth of the 2 individuals, because it's a simple transaction. So in short, every person that wins, there is always another person that has a losing hand. It is always important for you to gain more than you lose so that you can grow your capital and increase your portfolio. D-Man is the creator, founder, and the leader of Blockchain Whispers. He's responsible for coordinating, communicating, and molding the diversity of Blockchain Whispers. D-Man also scours the best analysis out there and intel for the best gyms out there. Blockchain Whispers consists of multiple fundamental analyses and technical analyses, whose work is parallel, and the work grows with D-Man to ensure the best possible results for you guys, our family. D-Man, myself, Miss J, Mr. Y, Cartel H, Cartel S, Sicario, Hellfire, and the whole alphabet making the dream team for this operation. So what gives Blockchain Whispers the edge? Trust, communication, passion, and skills. These are the 4 pillars that gives us the results and the ultimate edge. On this elementary lesson 1, we learned about what is blockchain and how it works. We explained about the history of Bitcoin. You also learned about the different cryptocurrency wallets and how to keep your cryptocurrency safe from hackers or malware. You were guided how to use stop limit, market, and buy limit options on exchanges, and understanding risks. Stay tuned for our next elementary lesson video 2, where we will be teaching you the basic trading knowledge. Our topics will be about top 3 mistakes beginners make, portfolio management, time management, trading styles, and know how to trade. Make sure you subscribe to our YouTube channel and press the notification bell to get all the published videos firsthand. Also, make sure you subscribe to Blockchain Whispers on our website www.blockchainwhispers.com. Read all our posts from the very beginning and you will learn about our journey, why we are the best, and also how Blockchain Whispers can help you achieve your financial goals and crypto knowledge. Thank you everyone. This is Blockchain Whispers, baby.